in terms of TPB, this is my key principle for trading. I trade, T is trend, P is pullback, B is breakout. So what I like to do is I like to identify the trend, I watch for a pullback, and I trade the breakouts. Once again, identify the trend, watch for pullback, trade the breakout. Now, if you take a look here, what is the point of having this type of approach? Well, very simply, and I've been talking about this for years actually on Fxstreet and many other venues, in terms of the fact that I'm a trend follower. So I like to follow the trend. I like to trade with the trend. So path of least resistance. So number one, I'm looking for a trend. Number two, I'm waiting for a pullback. Why am I waiting for a pullback? Well, the fact is that in any trend trading situation, the best possible place to get into that trend is not on in terms of, let's say there's an uptrend, is not on a breakout above the high. Rather, it's a pullback after a pullback occurs, or recovery of a pullback occurs. Okay, so I'm looking for some type of a pullback. Why am I looking for a pullback? Well, that is the most cost efficient, the most cost effective way to get into any trend. Because if you think about it, if you're in an uptrending situation, let's say, and you have a pullback to the downside, okay, you're getting in at a cheaper price. You're getting in long at a cheaper price. And that is a cost-effective place to go. And plus, that will also help with your risk to reward or reward to risk ratio if you get in at a lower price. By the same token, in a downtrending situation, you are looking for to get in at a higher price. So let's say price is downtrending. You're looking for a correction, a retracement, a pullback, wherever you want to call it, to the upside so you can get in at a higher price, because essentially what you want to do when you're going short is you want to get in at a higher price and get out at a lower price. And that's where you get your profit. So I'm always looking for a pullback. Now, the third element to this is the breakout. Now, when I talk about breakouts, there's oftentimes a lot of confusion. Now, some people say, are you looking for a breakout above the high of that trend? Well, not necessarily. What I'm looking for is some type of a breakout to show me or to give me some indication that the pullback is possibly recovering and price is going back in the direction of the trend. That breakout is giving me that indication. So does that mean that breakout is breaking out above the last high? In this case, if you see over here, I don't know if you could see my mouse right here, but a lot of people ask me, when you talk about breakout, are you talking about a breakout above that high? Okay. Well, no, that's not the best place to get in. What I'm usually talking about when I talk about breakout is I'm looking for after the pullback occurs and price turns back in the direction of the trend, then I'm looking for a breakout that's indicating to me some type of a resumption of the trend. Okay, giving me some indication or some hint of a resumption of the trend. And let me show to you on a real chart an illustration of that. But before I get to that, let me just finish this slide right here. Now, once you get in on this breakout, and you see this blue line right here, the short blue line as my breakout level, that's my entry level. Once you have an entry level, okay, and this is an uptrend, it could happen just as easily on a downtrend, but just for illustration purposes, I'm using an uptrend. So if you have a breakout above this blue line right here, okay, and I'll illustrate that in a second on my charts, but if you have a breakout above there, that is your entry level, and right away you could define your risk. How do you define your risk? Well, you put your stop loss, whether it's a hard stop loss or a mental stop loss, right below the low of that pullback. Okay, how do you know it's the low of the pullback? Well, once price turns and pivots on that low, then that's where you have the low of the pullback. And then you have the breakout level, which is your entry level, and then right away you could place your stop loss, and that is your defined risk. So right over here, I have this bracket here in red that talks about risk. That's your risk. And at that point, not only can you choose your stop loss, once you have your defined risk, then according to your reward to risk ratio, risk reward ratio, whatever you want to call it, you can set your reward. And preferably in a trend following situation, you want your reward to exceed your risk. So in this case, once you have defined risk, then you could define your reward as well, and that would be your profit target. So in green up here could be your profit target. It could be 2 times, it could be 3 times, it could be 2.5 times your risk or what have you. And you want to make sure that your reward is larger than your risk. Okay? So once again, number one, I'm looking for a trend. I'll show you exactly how I do this. This is just the approach right now. I'm going to show you the specifics in a second. So the approach, you find the trend. Okay? Number two, you look for a pullback. Number three, you look for a breakout that's giving you indication of a continuation of the trend after the pullback or recovery of the pullback. And then at that point, you have your defined risk. Once you have your defined risk, you could define your reward. And at that point, you can know both your reward and your risk, and you have very well-defined reward to risk ratio. Okay. So underlying all of this approach is risk control through stop loss. Now, a lot of people ask me, you talk about stop losses all the time. Are you talking about hard stop losses or mental stop losses or what? Well, usually I'm talking about hard stop losses, but for some reason or another, a lot of people do not like to place hard stop losses. You can place mental stop losses if you like. However, you must, if you choose to place mental stop losses, you must have the discipline to follow through on those stop losses. Okay? If you do not have the discipline to follow through on your mental stop loss, you might as well not even be trading. Okay? Or you place your hard stop losses. Okay? It's very, very simple, at least from my perspective. Okay? So underlying principle to this whole approach is risk control through stop loss, whether it's hard stop loss or mental stop loss with discipline.